I'm Joseph Novichkov, Senior Trading Manager with GDM. Welcome to today's webinar, basically the last webinar for the month of October. Now, the difference why we're presenting this webinar today, which is the 3rd of November, was my personal inavailability to lead the webinar last Friday when it was the actual date. So I would kindly ask everyone on the webinar today to please accept my sincere apologies because I wasn't here. I wasn't at the office on Friday last week. I was quite preoccupied with some family business, and pretty much I was unavailable for the largest part of last week. However, we here at GDM would not miss an opportunity to present something interesting to you, something that you could probably easily use and incorporate into your trading plans. The system today that we will have a look at is, as I mentioned, the last system which is mostly volume based. And speaking of volume, so far we have seen multiple type of systems that work good on medium-term time frames down to the 5-minute charts, which is a scalper system today. We saw the 4-hour chart, how it reacts on certain technical indicators, how we have been we've made them to work best as they can together. We have revised a system that was not performing as well as we were expecting in the long run. However, the simplest explanation to all of this is that we deliver everything for free. All that we are developing here or finding necessary and useful for you to know, delivered straight into a free webinar that anyone can attend. Well, the one thing that we are clear so far is that the system that we're going to take a look at today is a 5-minute scalper system, extremely effective, especially, and underlining especially, currencies, commodities, indices, or any instrument that you're having on your platform with the minimum tight spreads down to 1 pip, 1-2 pips. I'm saying this because the very simple reason a scalper system is effective is because you're using it on tight spreads and you're basically benefiting from everything that the market can give you at any given point of time. Today, however, the system is a combination between Bollinger Bands and the money flow index. Now, we already know how the Bollinger Bands are usually used. What is the interpretation of this particular range? The money flow index, we also spoke about it once in our webinars recent months ago. However, I would like to remind you guys that it's a volume weighted relative strength index type of instrument. Let me put it this way. The money flow index is an oscillator that uses both price and volume to measure buying and selling pressure. When we talk about pressure, we always have to know that we're talking about extremums, the conditions where the price is bottoming or reaching any given point of peak. Therefore, again, we are using, as we've been using so far with the commodity channel index, with the volumes percentage range, multiple systems, very nice systems, as we already saw that. We're all aiming to catch the overbought and oversold conditions of any given market. Today, the also known volume-weighted relative strength index, aka money flow index, usually takes a price for each given period to measure the positive when the typical price is rising and the negative when the typical price is declining, which is positive pressure or negative pressure. The ratio between those two gives us the money flow, which is either negative money flow or positive money flow. Or let's say money flow, outflow, inflow, outflow. It's very easy to remember. As a particular momentum oscillator, one more time, it is a momentum oscillator which is tied strictly to volume. The MFI, or the money flow index, is best incorporated to identify reversals in price which are close to their extremums, with of course variety of signals that we are going to filter out along with the Bollinger Bands to give us our trading signals. Given the period of the technical chart that we're using, which is 5 minutes at this stage, the volume-weighted version of the RSI, or the money flow index, can be interpreted, of course, as a relative strength index. However, the biggest difference here is the volume, one more time. Because the volume is added to that particular mix of momentum and overbought and oversold conditions of the relative strength index, we can actually determine the price direction much earlier than the relative strength index. However, that doesn't mean that the RSI is not a good indicator. It only means that with the combination of the two indicators today on that time frame with the given tight spreads of the currency pair, we can actually have a very good signal that we can use each day to profit. And I have to say, quite good profits we have witnessed so far in this in our firm. Without any further delay, I will just go ahead, set up the system for you so you can have the time to write down, make screenshots, or ask questions if there is something that you don't see. Let's see if I've been using any of these so far. The Bollinger Bands were quite recent. Just going to go for the color of white for the Bollinger Bands. However, today's period is the standard 20 with deviation of 2. I'll tell you why. This is how it looks. I might be able to shrink it in a little bit, something like this, so we can have a better visual on very, very few details which we have not used the Bollinger Bands like that the way, so far. That means we need the money flow index. We can find it on volumes, strictly on volumes. As I mentioned, it's a volume-based indicator. We can see that there are some levels that we've been using before. We don't really need those anymore. Just the parameters, which in this case we're going to use a much smaller period according to our 5-minute graph, and this is the 8 period. However, as you can see here, is not going to be very clear for you, so let me just go ahead and set up a few of the overbought and oversold levels. So we're usually going for the default levels 80 and 20, only because we need to know exactly where we are at any given point of time. Of course, I'm not using these levels because I do not want to get confused when I'm mixing this with another system, of course. Let me put it this way. Sometimes, okay, let's say most of the time, I'm using both, two different systems. So let's say with different colors on one and the same chart, one and the same currency pair, I'm using different systems, one on top of another, so I can switch between graphs, between time frames. In that case, when I have my 6 monitors around me, I don't have to open a different currency pair for a different time frame, but I can simply just go switch between 30, 5-minute or 1-hour charts. It really depends on what exactly I want to see at this stage. So as we can see, the money flow index is correctly suggesting where the market is going to reverse. Basically, as we mentioned, it's a volume-based relative strength index. That would mean that every time the market makes a peak above the level of 80, it is clearly a market top. But how are we going to be sure that this market top is precisely as good as we need it for our signal. That's why the Bollinger Bands are coming in handy. Let me remind to the basic traders so far that are just coming to the market what Bollinger Bands are. Okay, we have upper range level, lower range level, and a moving average. That's the easiest explanation as we can get. The 20 period is the moving average that it measures 20 last sessions, or that's 25-minute candlesticks, to make a curve which is smoothened out of the past 20 periods to the current price. And the deviation that we have, which is 2, which basically catches about 60% of the market conditions. 60-66% of the market conditions. If we have been using this the other way, where we use deviation of 3, then we're actually catching 90% of the market conditions. And this is not exactly what we need. We are scalpers with this system. We need the market to close out of these Bollinger Bands. So basically we need it out of these 60%. Okay? We know that 60% of the time the market will close inside of that Bollinger Band, like this, for example. But in combination of the money flow index, when we have them both, the money flow index, in this case, reversing to the downside, breaking that 80 level, and we have seen that the previous session have closed out of the Bollinger Bands, we can definitely suggest that the next direction is down, and this is 15 pips, measured with one lot, is $150 in 8 sessions. Now, speaking of scalpers, scalping system, that's about 40 minutes worth of your time to collect $150 with one lot. Now, when we talk about scalping system, we always have to go with the absolute minimum within our risk management system. So if we are more of a conservative traders, we would normally use 5% out of our account. If we are more of aggressive traders, we normally use 10% out of our accounts. So given the fact that we are probably going to be trading with one lot here, let's say, because it's easier to calculate, that means we need to have about, for aggressive trader, that's $15,000. That's about $1,500 in a locked position for one lot, which is much more appropriate. Now, if you're going to go for 5%, of course, that's about $750, and that's half a lot, which means on the 15 pips of profit, you're going to be taking not $150, but $75. Still, for 40 minutes, that is worth your time. And not only, but simply because the market is always going to reward us with a position like this one. Full extremum on the money flow index, Bollinger Bands closing outside of this of the upper range. The next time the money flow index crosses to the downside below the overbought conditions of 80, we get another 3 pips. That's $30 on the lot for about 7 sessions, and that's 35 minutes. So this is on what the system is focusing. Extremums like these, or this one here on the money flow index, closings above the Bollinger Bands, and of course imminent downside to a take profit around the moving average. This is why we're using the Bollinger Bands, to give us the first signal or the second signal. It really depends which one is going to be first. It usually goes along, you know. First is the money flow index because it's much faster. Later on, the price reaches a peak from where it starts reversing. And we can clearly see that the money flow index is way off the charts here. Our particular price is closing outside of the Bollinger Bands, but still rising despite the fact that the money flow is decreasing, which is actually a much better sign that it tells us imminent downside is to be expected. But these are just 3 cases so far. Let's have another look at the charts. Also, this is a good place that I need to remind you guys. Do not be greedy. This is a scalping system. It will give you many opportunities. You will see so far when we start backtracking this system live on the chart. Also, single position profits might not exceed, let's say, 20 pips or 30 pips. That will be a rare occasion. Simply, speaking of scalping system, it usually goes down to the smaller pips, 10, 20, 30, the maximum, okay? That would mean $100, $200, $300 on lot per position, depending, of course, on your total equity and the suitable risk management system that you're using. Which leads us to the next case, why we should not use the system when it's like this. Because that's only one case where the market peaks above the Bollinger Bands, gives us some kind of profit here, probably another one here. But why we're using the system like this is because avoiding these particular cases, we would be on the safe side for the long run. Now, the system has been tested for quite some time, which means that I have been testing these conditions as well. But having it peaked above the levels of overbought and then started to decrease down below the levels of 80, and with the Bollinger Bands pretty much in one same time, outside of the upper range of the Bollinger Bands, that is always, let's say, 90% of the time it will reward us with pretty good profits. And speaking about such an accuracy is something that we usually aim here at GDM. Something that, let's say we're trying to develop not always something for the aggressive traders, but mostly for those that are just coming on the market. They're extremely conservative with what they can rely with, let's say, the amount of money that they can invest for the first time or second time, or let's say they're extremely reluctant to go full force. They don't have the psychology to withstand some kind of negative balance on their accounts. So we're basically aiming to sustain growth on an account with regardless the size of the balance. So basically you can go on with $100, with $200, or even $20,000. Your result in percentage would be pretty much the same. However, if you have $20, $30, $100,000, of course, the amount of lots that you can trade per single position like this one would definitely result with much larger profits. But that doesn't mean that steady, surely, you won't be able to grow that account to such a level so you can start using large amount of lots and get close to professional traders in the future. Enough pep talk. Let's take a look at the system again. Taking a look at this peak here, the price had the money flow index have peaked up above the levels of overbought. As you can see, it's closing outside. Even if we decide to sell on this candlestick when the price is breaking down, right here we have about 4 pips. That's $40. Even if you can see how many times the price have tried to break off before hitting our target, which is on the moving average, even if it's just a retracement from a current trend. Mark the words, even if it's just a retracement on the current trend. That doesn't matter. It's still valid. It's still a good signal that you can use to make money with it. In this case here, when we mentioned that the condition like this one would be a very rare occasion, and in the future, in such conditions, we would see the price bouncing even higher. Here is a signal which we don't consider valid, but it actually starts way over here. The price is breaking off, closing outside. We can see the money flow index peaking out. We are selling somewhere here down to a break even, which means it doesn't matter how much profits you're making. If the price hits the moving average, you're closing your position regardless of the profits or the loss that you can make. Also, there is a stop loss conditions that we will, of course, take a look at in just a few minutes. But let me first cover another case. As you can see, the price is not closing outside of the Bollinger Bands here. Therefore, we do not consider it as a valid signal, although the money flow index is making the curve or the peak and then break off as we need. But here is that condition that we need. As you can see, even if in this peak, the price have already peaked on the money flow index, showing us that the next candle that closes within the Bollinger Bands, or even the one that's outside, will deliver about 18 pips of profit, or that's about $180 in 4 sessions. That's 20 minutes, ladies and gentlemen. 20 minutes and you are on the profit. Here is a very peculiar case, which some traders, if you zoom it in, you will see that probably the price or some type of candlestick that it's formed is closing outside. Actually, when you draw the hair or the crosshair, you will clearly see that the price is closing within the Bollinger Bands despite those peaks out here, which is also invalid signal, which means that when the price is actually crossing below, or speaking of the money flow index, crossing below the 80 level of overbought conditions, I can see this is just 2 pips down to the moving average. Probably you would be like 5-10 cents on the lot or something like that, which is definitely not worth. Another condition is, as we can see over here, which the system could also fail you, when the money flow index is hovering around the 80 level, but the price is still not going to the moving average. This is why when I'm saying the time will come when we speak about stop losses, we can always rely on a very good stop loss when we have our opening of the next candle, and we put it about, let's say, about 5 pips off the previous price close, which in most cases would definitely keep us safe from any market condition, which in this case we would lose $50, but so far we've made around this one was 180, this one was another 40, that's 220, this one was not valid. The ones over here, where was it? This one here made us another, it's about $30 here on the lot. And in this case, as we mentioned here, that's about $140, $150, $60. So that's roughly around $600 on 1, 2, 3, 4, 5 positions on the 6th here. So 6 positions, 5 out of, so that's 6 positions so far, and only one of it lost you $50, which made you richer with $550 on the lot. And I would call it that this is a pretty good scalping system so far. Another condition, as we can see, let's stretch out the chart a little bit. We can see the price closing outside here. The next one that closes within it and we sell, that would be over here, that's 1.3 pips, that would be on the break even on the euro dollar. Another money flow index of the overbought conditions is here, but we see the Bollinger Bands are not exactly where we want it. Another case like this one is here, but there it is. This is a case where Bollinger Bands are closing outside. Then the money flow index is starting to decline with this candlestick, small candlestick, it's peaking out. The next one that's closing within it delivers about 80 pips roughly. That's $80, another $80. As we can see, why I mentioned that in cases like this one, in peaks like this one, we don't really want to be in the market, is a case like this one. We're roughly going to go on 2 pips of profit, but then the market is going to punish us because that's about 5.7 pips or 57 baby pips where our stop loss would be hit in this case, if we take that case, which is not a valid signal. Also, cases where bounces off from the moving averages should also be avoided, again, despite the fact that the money flow index is above the overbought conditions, declining from there on that candlestick, as you can see. You might be able to make some roughly 6 pips of profit, but then springs back up before it breaks down. That's a very unnerving situation, so please believe me, avoid cases like these. We don't really need them. You see the same case here. Price stays within the Bollinger Bands before or after the money flow index is just making a very small curve up there. Also same case here and here and here and here. You can see flat market, basically no reassurance that the market is going to give us something like this. Money flow index clearly breaking off, starting to decline, and the moment it declines below the levels of 80, we can just go here for about $130 of profit. That's 13 pips on the lot. Clear profit. You can see how imminently the market is usually going down to the downside. Same case here. You see that's a false one, but this one is a valid because we already have the price closing in within a session or two. Then the price starts declining. The next one that closes in imminently drives us to another $140 of profit. This is 14 pips. So you see, when the conditions of the system are met, we are just an inch away from our profits. The same case here. We can see the curve clearly breaking off, then declining. A clear close outside of the Bollinger Bands. The next one that opens is outside, or the next one, it doesn't really matter which one you enter. I will definitely go on the one that crosses the 80 level, which is this one or this one. It depends on which one you go in. That's another $30 of profit. That's 3 pips here. Also this one, you can see very small profits, ladies and gentlemen, but very sure profits. That's another $350 of profit here. Very tiny profits, very frequent, but very clear, very sure, without any acceptance. You can see the distance between where the market is breaking off without the Bollinger Bands standing outside. You know, a very, very tiny profit that could be made. But still, on cases like this one, when the market is too aggressive to the outside and starts closing with the money flow index clearly breaking to the downside on that candle here, now that's a very good $170 of profit in 2 sessions. That's 10 minutes worth of your time to make that beautiful profit. Same case here. You can see 2 beautiful candles. This one is breaking off to the downside, another $50 of profit. Also the same case here. Money flow index starting to break down below the 80 level. Another $50 of profit here. So you see frequent small profits from time to time. We can get a very nice candlestick worth about $150 to $200 of profit, which the system can give you. Only if you rely on the rules of it and you stay clear from cases like this one, just closing outside the money flow index, almost there, but not enough. Choppy market is just going to make you nervous. It's just going to make you close a position that might give you a chance in a few minutes to enter in a better position, which in most cases drives a lot of people crazy. Same thing is actually from the bottom up, basically, to the upside, or let's say bearish to bullish conditions. You see how the market has been going down, down, down. The candlestick is closing outside. Right here, the money flow index is making a peak. Then it's breaking in. From here, we get another $50 of profit. And that's pretty much valid for any cases of what we say bullish, bearish cases. It's the same. The only condition is that if we're going for bullish, for long positions, we should see the money flow index bottoming here, then breaking up on that candle, or this one, on this one, another $30 of profit. Same condition here, Bollinger Bands closing outside of the bands, money flow index breaking to the upside from the level of 20 up to the moving average, $50 of profit. It's pretty much the same. You can see here as well, it's pretty much the same. It can give you a very tiny small profit, but it's a profit, and it's much more certain than if you actually take a condition like this one or this one, for example. It wouldn't do you any good. Now, this case is a very particular one. I wouldn't go buying if I only see the money flow index touching and basically running along the 20 level here. I would see it make a small curve, you know, like this one. That's a pretty good one. This one is better. This one is also good. But doing things like this one can always drive us into a sideways direction like this one with pretty much no profit at all. You know, it's better that I take a condition like this one when the market is clearly off the Bollinger Bands, breaking down the 80 level, probably catching about $30 of profit here when the price reaches the moving average in about 10 sessions. That's 50 minutes. But this is still a profit, and I will be much more sure that the market is heading toward my direction, and I wouldn't mind it letting it go, touch the moving average, or just hit my stop loss if it wishes. You know, I wouldn't mind that as long as I am meeting the market conditions, or let's say the conditions of the system. That's another $100 here. You can very easily start spotting these peaks and troughs all along. You can see how the market is closing off the Bollinger Bands range, and when it starts aligning with time, that will give you very good profit. But that's all about it. I'm not going to be talking any more about it. Just go ahead, ladies and gentlemen, take your time, backtrack it. You know, this is October 25. That's 10 days. Now we, is it about 10 days? I'm seeing here that's second. So it's actually 7 days. That makes it roughly about 5 trading days. We saw about, what, 20, 30 positions so far. I didn't really count it, but let's say only one case headed our stop loss. 2-3 times we made break even, and the rest of the cases were simply profits, and that's 5 days. So find me, please, a scalping system that in 5 days will give you 1 stop loss, 2-3 break evens, in about 15 profits. Well, you're always welcome to suggest. So that's all about it. One more time, if you have any questions, I'm going to let you just test the system. Whatever questions you have, just forward them on GDMFX.com. You will find a pop-up chat on the bottom right corner. Our support department will over there answer all of your questions, and if they're not capable of answering any more technical questions, you can always request a one-on-one session with me or any of my colleagues, and we will always be there to assist you on any case you have. For any questions you might have on the system or any irrelevant questions for any systems, you can always drop us an email at webinars@gdmfx.com. That's all from me for today. I'll see you in about a week time or so when our new webinars will be posted on our website, and you can start signing up absolutely for free, and you can, of course, attend by your wish. Meanwhile, if you like what you see, if you like the firm, if you like what we do for you, the services and everything else, you can just go on Facebook, rate us, like us, do whatever you like. That's all about it. Thanks a lot. I'll see you next time. Bye-bye.